All right. Good afternoon, everyone. My name is Gonçalo Moreira. Today we are going to cover the three-box pointing figure reversal chart. It is part of a pointing figure series that we started a few weeks ago with a one-box reversal chart. This time we are going to advance a little bit more in the construction of this chart variant. Therefore, we will, like we did last time, we will simulate the evolutionary steps of the construction of the pointing figure chart. We will do a step-by-step construction of a three-box reversal chart this time, and by the end of the session we'll have some links and references. And as explained just at the beginning, we will overlap with some of the contents from the last session that we lost in the archived version, so that we can follow it easily, and also when viewing the recorded webinars. And finally, we'll have some time, hopefully, for question and answers. I would like to start with a quote from Victor de Villiers regarding this type of chart. It's a script from 1933 in the book, The Pointing Figure Method of Anticipating Stock Price Movements, where de Villiers says, pointing figure charts dispense with statistics, fundamentals, values, real, absent, or presumed, news, past, present, and future, the necessity for impulsive action, decisions based on conjecture, compulsion to interpret or determine the effect before the cause, and the confusion of mental processes in the task of prematurely anticipating or discounting coming events. I think it's a beautiful sentence that condensates pretty much what technical analysis is. And this is one of the reasons I want you to cover this topic. It may be a bit dense at the beginning, since it is very different from other time-based charts that we usually make use of in Forex trading, namely the bar charts or the Japanese candlestick charts. The construction here is quite different from those variants, as we'll see, and it may be a little bit dense or strange in the beginning, but as you will see, the principles behind its construction of pointing figure charts, and also the use of it, the use you can make of it, and the information that these charts offer, condensates pretty much what is the essence of technical analysis. Okay, we will understand the arguments behind this sentence from Victor de Villiers as we progress in the content. Okay. Last time we started briefly taking a series of sequence of numbers as there would be a prices taken from a ticker tape machine. Okay, we have here a sequence going from the left to the right and down. We see that they start at 9 and end at 16. We avoided writing down fractions, so we took round numbers. And based on this price sequence, so the number sequence, we try to see if there is anything that we can extract directly out of a price sequence without a chart. We saw that it's pretty difficult, but if we build a chart, in this case a figure chart, out of this sequence, we saw that immediately at a first glance we of a notion where the high, the low of that data sample is, where the start and end is. Okay, so we can gather, as in other types of charts, more information than from a pure time or a pure price series. Okay, but besides of those areas which point to the maximum and low levels, we can also figure where the bulk of the trading was taking place. In that case, we have here the price sequence where I outlined the number 20. This was the most traded price, so to say, and we see in the figure chart it corresponds to the row that is most filled. Okay, this is a useful information that we can extract from point and figure charts, as we will see in further sessions. But for now, we can anticipate that if we see any price level where the bulk of trading was, we can also deduct that at those levels, the supply and demand equation was at its equilibrium, so to say. It was where it was most balanced. And if supply and demand is balanced, there is less movement in price, right? And less movement in price is more difficult for us to anticipate the direction. And when it is more difficult to anticipate the direction, it's also riskier for us as traders to take a position. Okay. So at first glance, we have already from this disposal of prices in ascending and descending rows, we could extract already all this information. As we see here briefly, we see that the numbers above in the sequence correspond to the chart below, where it starts with a 9, goes up to 16, and then down to 10. Oh, sorry, I changed that. Down to 10. Again, upward moving to 21, and so on and so on. Okay. The number of figures comes from the fact that figures were drawn in the boxes initially. So at that time, it's what we covered the last session. We observed that point and figure chart is an excellent representation of supply and demand. We also observed that when the market is quiet, the charts do not move, since you only change column when there is a change in direction, and you also only print a new box if there is a certain amount of price movement. Otherwise, the chart doesn't move. So there is no time implicit or regular time intervals used in the charting. And we also observed that no record is made of price gaps. Okay. As for gaps, I will not cover it here again. We have it recorded in the last webinar. But we also observed that writing down numbers, the so-called figures, is quite tedious, especially if we would have to write down fractions of round numbers. Okay, that would make the chart unreadable. So the next step in the evolution of point and figure charts was to transform the upward moving price series in X rows, and the downward movement with O's filling the boxes. Okay, so we have here the same chart representation as before with the figures, but only this time we have X and O's replacing those prices or numbers in the above sequence. And here we can also notice that taking an excerpt here from the series from 22, down to 20, up to 21, 20. This area here on the chart, okay, corresponds to this part here of the series. And what we have here in front of us is a one box reversal chart with the so-called one step back. The one step back is when you can plot in the same column an O and an X. Okay, so we covered also this first variant, simplified variant of the pointed figure chart called the one box reversal chart. Okay, so by that time we knew that pointed figure charts allow to follow price action during the period of recorded data, so we can see the changes in direction. We can clearly see the directional moves in the columns moving upward and downward. We can also easily see the high and the low of the period, as we have just seen in the previous slide. We can also see where most of the trading was taking place by looking at the most filled rows. And it does also allow us to write large data samples in very little space. Okay, this is something interesting. In fact, you can, on the back of an envelope, you can plot 1 minute high, low, and close data for 1 or 2 years. Okay, you can have a clear chart based on 1 minute data written on the back of an envelope. Okay, which you can't using other chart types. If you try to condense 1 minute data or even tick data into one chart covering 1 year of data, you would need a very large chart. Okay. It does also allow to prescind from time data. Okay. In this case, we only need price data in order to build the point and figure chart. Okay. I'm asked here if range bars are the kind of point and figure charts. No, range bars is a different type of chart. Okay, then the following step was we took in this time we took a price sequence, not with proud numbers anymore. We took fractions as we have them with 4 digits in the Forex market, and we started to construct a chart. In that case, we constructed a one box reversal chart. And this time we are going to construct a three box reversal chart where each box has the value of 10 pips, and the reversal being 3 boxes means in order to register a reversal you need a change in price which is at least 30 pips, 3 times 10 pips, which is the amount of or the value corresponding to one box. And here we see, starting from the first price in the sequence, we have 1100. Then the second price, taking 1105, we see since we are here now at the green box, since the second price is just 5 pips above the corresponding box, which is 00. So here we can't plot another box. We need at least 10 pips above or 10 pips below. That means we have to register a price of 10. I'm omitting here the first 2 digits, 10 and above, or 90 and below. So only at the third price we can plot a new box. Okay. In that case, the price corresponds to the value of the box, but as we will see, we can have other numbers. Like here, for example, we have the fourth price being 12. 12, the last plotted box is the 10, is the number 10, which would be the second X here, the box in the middle. And since 12 is only 2 pips above the last plotted box, so that price is ignored, and the fifth price is also ignored. 18 is just 8 pips above the last plotted box. So only when the price reaches 1120, 20 is 10 pips above the last plotted box, which is 10. So we register here we fill another box above the previous one. Okay. So it's always the last plotted box that is considered whether to fill the next box or change column. Okay. So we never make the mistake of considering the last price. Okay. It's always the last box. We'll see more in detail how this works. Okay. So and here we move on. The seventh. Okay, we are now here at the 20 box corresponding to this one, and price number 7 is 36. So it's 16 pips above the 20 box. So 16 is more than 10, less than 20, corresponds to one box. So we plot 1x above the previous one in the same column. Okay. Then we move on to price number 8, which is 21. Next one, 29. So in here, in order to plot another box, we would need 40 and above, or 20 and below. Okay. So it's only when we reach price number 10, which is 20, that we can plot another box. In that case, a no, since it is a reversal. In that case, we are still here with a one box reversal. We reverse by one box, and since we can't plot the O on the same column, on the same ascending column where we were, so we have to switch column to the right, and we plot an O. Okay, this is the basic principle how the one box reversal chart works, and so forth. We move on here. We see that only prices 11, 15, 16, and 20 were plotted. All the others had to be ignored since they do not fulfill the conditions. For instance, if we are here at price 11, corresponding to 39, okay, the price 12, 13, and 14 were 21, 29, and 38, so they were not 40 and above, or 20 and below. We had 21, but it was not enough to print another O. So only when prices went back to 13, we could switch column and fill the box here with an O corresponding to the 20 line. Okay. And this is called, when you have the O and X within the same box, it's called a one step back. One step back can only occur in one box reversal chart. Okay. What we will see today later, the three box reversal chart doesn't use, you never will see an O and an X plotted in the same column. But still, it's interesting to see, since these were the first variant of a point of figure chart, gives you also a clear idea how they were constructed. Okay, so the one step back happens when the price reverses direction by the value of one box only, and then reverses back in the opposite direction. Okay, and then we moved to price 2025, and we see we already have 25 prices ticked, so to say, but we have only 13 X and O. So somehow we simplified price action into the chart. So we omitted a lot of prices which were, according to the sensitivity of our parameters used here, was considered noise. Okay, and already we can also see on the chart here, on the small chart here on the right side, that a resistance is starting to build. Okay, and at this time a horizontal, perfect, established resistance. Okay, this was not seen in the price sequence alone. It was impossible to see at a glance without charting method that there was some kind of resistance in the making, and if we could, it would be never so clean as in the chart. Okay, so this is another of the virtues that point and figure charts have. The supporting resistance are very clean visible on the chart. And here we have the complete sequence up to price number 50, and here on the right side we see we see the complete sequence in the one box reversal chart. Okay, now we'll move to the so-called three box reversal chart. This means here we'll take round numbers again. Okay, we'll simplify, and let's say we have a price sequence. We're coming from price 10, then we have price 12, 13, 11. So let's look here to the chart on the left. Okay, we are in an ascending move. Okay, we have plotted our last price here in the box 12, corresponding to price 12. Okay, and then prices moves to 30. And since every box here in this example corresponds to the one value, okay, we can advance one further box. So we go up to 30. Okay. And what if the next price prints an 11? Okay. So can we move down in a row of O's in that case to 11? Let's think about it. We are here using three box reversal chart. Okay. Each box corresponds to the value of 1. Okay. Each time the price moves by the value of 1, we plot a new box. But we need in order to change direction, in order to move to the right and print a new column, we need at least a reversal of 3 boxes. Okay, that means we need a movement of 3 units. Okay, so if the last plotted price was 13 and the next one is 11, we are just 2 figures away, right? 2 figures away. So that price is ignored. Price number 11 is ignored. Okay, so next price registered is 14. In that case, we can move one box more in the same column in the same direction. Okay. Now the next price after the 14 is the 11. Okay. 11 this time. 11 is 3 points away. It's 3 points away from the last plotted box, which was the 14. In that case, we can plot a new column of descending O's. Okay, so that is how the 3-box reversal chart works. Okay, so we need to wait for a reversal which corresponds to the value of 3 boxes. So the value of 1 box is discretionary. You can establish it from the beginning. How much, or in our case, how many pips does 1 box correspond to? And by saying I'm using a 3-box reversal chart, I'm constructing a 3-box reversal chart by saying that you will only register a reversal when it is above 30 pips. Okay. So once we have printed the price 13, it goes back to 10, and then we can also plot here the 10 on our next box below the last O. Okay. So here we have the same price segment as before, but now we'll try to construct a 3-box reversal chart with the same price sequence as we had before. Okay, so we already have here plotted price number 3, which is 1110. Then we ignored price number 4 and 5, since we need, we are here on the blue one, since we need now to print 20 or above, okay, in order to move in the same direction, or we need 30 pips below in order to plot a new column of 3 O's. Okay, in that case, next prices 12 and 18 were not enough to print a new box in the same direction. But the price number 6 and price number 7 were just well to plot a new box above. So we were here at the box number 10, and since the new price 20 is 10 pips above the last box, okay, above the last box value, so we print another X. And 36 is 16 pips above the last plotted box. Here we are. 36 is the 16 pips above the last plotted box at 20. So we plot a new X. Okay. So far, any questions? We are advancing fairly well with this dense topic, which is point and figure chart. All right. What we will see now is perhaps the most crucial part in understanding how the boxes are filled. Okay, because it may sound simple, and especially with a 1-box reversal chart, it's pretty straightforward. But when we start to have multiple box reversals, we are now here handling with 3-box reversal, but the box reversal can be 5-box, 7-box. Can decide what is the amount of reversal to use. Okay, and that is where it gets a bit complicated. So let's zoom into the price sequence that we had before. Okay, here on the left side we have the box value sequence. Okay, starting at 90, 00, 10, 20, 30, and so on. And here we have the column of X already plotted, and the corresponding colors to the prices that were being registered on the ticker tape. Okay, and we are coming from the 1100, 05, 10, and then we plotted the price, or we got the market registered price 12, and we were in the box corresponding to 10. Okay, 1110. Okay, I will speak only with the last 2 digits. Okay, we are in the box 10 now with the market printing 12. Okay, as we can see here on the price. These are the prices. Sorry, I'm moving here the slide. Here you can see the prices as they are being traded or registered in a tape, and to the side of the plotted boxes. The next price to 12 is 18. Okay, this is 6 pips difference between one price and the other, but since we did not take into account the last registered price, we take into account the value of the box. So when the new price comes in, the new price is 80. We are still in the box 10. So 18 is 8 pips above 10. So 8 pips does not comply with a minimum of 10 pips, which is the value of one box. So we remain in the blue box, the box corresponding to 10. Okay, even if the price if the market registers a new price 6 pips above the last one. Okay. The next price to be transacted is 20. 20 is just 2 pips more than the last price, which was 18, but it is 10 pips more than the box that we are occupying, which is the box 10. Okay. At that time, the new X is filled. The new box is filled with an X, since we are going the same direction. Okay. And the next price to be registered is 36. Okay. 36 is 16 pips above the last traded price, but that is not what we consider in order to move. In that case, we count the number of pips which the new price is above or would be below our current box. Our current box is now the box 20, and the new price is 36. In this case, there is a coincidence that the difference is also 16 pips, but it's the difference between the last price in relation to the box which is already filled. Okay. So this is the way the prices are, or the figures are, or the points are plotted into the chart. Okay. Let's keep with the same example and visualize it in a different way. Imagine the boxes are boxes which you can fill with water, for example. Okay. Once we come to the price 12. Okay. The last box plotted below the current one was the box 00, and that box is already full. Okay, we see the red box is already full. And when the market registers 12, we start to fill the box 10. Okay, the box number 10. So we had already an X plotted there. As we start, as the price prints, the market prints 10 or above, we occupy that box. We build that box and we start to fill it. Okay, imagine we start to fill it here with 2 pips. Okay, each box has 10 pips, and we already filled in 2 pips. Okay, as you can see on the slide here. The next price is 18. So the box is still not totally filled, and we cannot also not move to a new box because there is still space to complete the box. Okay, so we will remain in the same box. Okay, even if the prices is going up. Okay, so we are filling the box. The market's moving up, but we are still in the box number 10. It's only when the market registers 20, okay, that we completely fill the box number 10. We establish a new box. We put the X on the 20 box, and we start to fill it. Okay, and we start to fill it as you can see it here. And when the next price is printed, 1136, and we completely fill the 20 box, and we put another box on the upside corresponding to 30, and we fill it 60. Okay. Do you see the logic how the price is constructed, and how the several prices being ticked in the market are filled within one box. So I think with this example we can also see how the sensitivity of the chart works. Okay, here we are working with boxes of a size of 10 pips. Okay, but you can work with any other size you like. Okay, You can work with boxes of 20 pips, of 30 pips, and so on. Okay. So let me ask you at this stage, which chart would be more sensitive to price action or to price movement? In a box corresponding to 10 pips or a box corresponding to 30 pips? I think it's pretty easy to answer. If I'm plotting a chart where each box corresponds to 30 pips, is it more or less sensitive? Yeah, Fernando, it's right. With a 10 pip box value, we have a more sensitive price. So you see, you have already two parameters, and these are the only ones that you can change in point per figure, which is the box size at one hand, and the other is the reversal amount. Okay, you start by defining the box size. Okay, in Forex we may use 10 pip, 20, 30 pip for a normal sensitivity. Okay, and then you decide play with the reversal amount. Okay, so you may say, okay, I want to advance in 20 pip boxes. Okay, any price movement below 20 pip will not be registered. Okay, so the chart will not move, will not print a new X or a new O in the same direction if the price does move more than 20 pips from the last plotted box. Okay, and then you may say, but I want also to keep with the same size for a reversal, and each time the price is reversed by 20 pips, I want to change direction in my chart. But you also may say, I want to work with a two-box reversal. That means 40 pips. Okay, because each box is 20 pips. If you build a two-box reversal, means two boxes of 20 pips, the 40 pips. Only when the price reverses by 40 pips or more, you move to a new column. Okay, so you can play with both these two values. Okay, so now it's the next relevant price, and by relevant I say a price which is not ignored in the price series, but a price that will bring us to plot a new figure. The next relevant price is 1095. So where would be the next column plotted? Where would be the O's in that case plotted in the next column? Which boxes would I have to plot an O if the next relevant price is 1095? Okay, so the question is, and in order to answer the question, we have to take into account what is the last plotted box. Last plotted box is 30. Okay, 30. 95 is that 35 pips below the last plotted box, right? 35 pips. It means it is above our reversal amount, which is 3 box, 30 pips. Okay, 5 pips allows us to plot a new column. Okay, since 35 pips is more than the reversal amount that we need to change direction and plot a new column. So in that case, let me ask you, where are the O's plotted? Which boxes would be the O's corresponding to a descending column? Where would be they plotted? Here they are. We would plot a box in 20, a no in box 20, a no in box 10, and a no in box 00. Okay? Since we would need, in order to put another O in the 90, we would have to have a market price of 90 and below. Of 90 and below. Sorry? Oh yes. Sorry, it's right. Here is a typo. Instead of an O, is a 1. Right. Thanks for the alert. That is why it might have been difficult to answer, since we would have a lot of O's over there. Right. Okay, my apologies. The price stating here would be 1195. The 35 pips below the last plotted box. Okay. So in that case, we have the 3 O's here, but we can't fill the next box with an O, since we are not we did not reach the box below 90. Okay. So when we see the complete sequence, the same sequence we used in order to plot the one box reversal, we see that we have many more prices ignored, since the three box reversal is less sensitive than the one box reversal. And on the right side, we see here how finally the chart looks like. Okay. Pretty simple chart with all the price action within the series condensed here in 3 columns: ascending column of 4x, a reversal of 3 O's, and then an ascending column of 5x. Okay. Okay, we have arrived to the final of the presentation. This is some of the bibliography. You can learn more about Poynting and Seeger chart. Let me give you the links to the books right here on the chart. These are the books. We still have 5 minutes. If there are any questions, any doubts, so please feel free. The topic may seem a bit dense and strange if we switch from charts which use periodical time distances. But the fact is that the same principles as used in Poynting Seeger charts are the concept behind. The concept behind it is the same that perhaps 80% of technical indicators use. It's the same logic behind it, and that is also the interesting thing in knowing how to construct such a chart, is that we much better understand how technical indicators, most of them, work. What is the logic behind most of the technical indicators, and not only if we talk about diffusion indexes used also in fundamental data, are based on the same principle. Okay, so maybe perhaps you don't have an interest in using these charts for trading purposes, but it's quite interesting. It's quite interesting to have a look and to try to understand the construction in order to have a better understanding of technical analysis in general on price action and also the construction of many technical indicators. Exactly, Mike. There is we do not take account of time. That means usually in other types of charts that we are used to, namely candlestick or bar charts, where the horizontal axis corresponds to regular price intervals. Okay, so we could say in those charts the horizontal axis, the second dimension is time. In that case, here, and pointed figure, the second dimension is the change. Okay, so you will have more columns in a pointed figure chart if there were changes in direction. So we could say here that the second dimension in pointed figure chart is the change, the change factor. Okay, so if there are no significant changes, and by significant it depends on the parameters you set after the chart. If there are no changes, there is no further advance to the right on the chart. Okay, so you can decide about the sensitivity, and once you have decided and constructed your chart, you can also see if a certain series of data corresponding to a certain time period, that's right, had a lot of changes or a few changes or no changes at all. Okay, so time is somehow used, but it's not in regular intervals. That is why we could say that pointed figure chart is pure price action. It's pure price action, and hopefully we will see in future webinars. We will examine price charts, especially what we would consider very low time frame charts, which can be based on tick data or 1 minute high, low, and close data. And we will see that depending on the parameters and the sensitivity, we can have a lot of price action condensed in just one chart. Okay. If you have, for instance, a 1 minute data on a 5-box reversal chart, okay, and each box you establish a box size of 20 pips, for example, you can easily have half a year of price data in your screen, and that's minute to minute data. Okay, so with other chart types, you could not plot or condense 1 minute data into your screen. Okay, or half year of 1 minute data. That is possible with pointed figure, and very clearly you can see where those reversals or imbalances in supply and demand were. Okay, because it removes all the noise of price movement. Okay, and you can decide what you established by noise. Okay, with both those parameters, the box size and the reversal amount. Any other questions? I know that not every platform allows to plot this kind of charts. You have to search a bit. There is, if you visit the services section, we have recently listed the teletrader platform. This is the one I use to build figure charts. If you want to test a bit, you can download the demo platform for several weeks and test on your own with the different parameters. Great. Okay. Strategy trader, FXCM. Fine. Okay. The important thing is that it allows you to modify the parameters. That's fine. Usually, what traders using it trading proposals, what they do is to have several grades of sensitivity for each instrument. Okay, so you can have a 20 pip box and a 5 box reversal to have the general view, and you can comprise several years of price data into one chart, and then you can go deeper as we go down in time frames with candlestick charts, for example. Here you just change the parameters, and instead of 20 pip box, you work with a 15 or 10 pip box and change the reversal from 5 to 3, for example, and you already have a more sensitive price. And as we will see in further webinars, there are a lot of patterns that can be identified in point and figure, which can be capitalized upon. You can also measure price objectives and so on and so on. All right. If there is no more questions, then we can end this session. Hopefully, you learned something new. I know it's a bit dense, the topic, but I tried through the illustrations to make it a bit more understandable. And the most interesting or the most important part, I would say, is to figure out really how the boxes are filled. Once you understand that, this is the core of the price construction. Once you understand that, then you will be able to draw charts on your own, or to understand charts drawn by any platform. Thank you very much for your attention, for your time. And if you have any questions, let me just type my email down here. Okay, feel free to contact me, and have a nice evening. Thanks, and bye-bye.